Hello traders, this is Rich Derrick from Tradesight. This is the evening market preview for Tuesday, February 12th, 2013. The session that we had on Monday was really very flat and really covered a very narrow range. The ES and the NQs were both virtually unchanged on the session after meandering a little bit higher, a little bit lower on both sides. It was kind of a day not that unlike what we saw on Friday, with just a little bit of activity in the first 30 to 60 minutes, and then kind of just a leveling off. So we're kind of contained here for the time being, but let's move ahead to the ES futures and also the NASDAQ futures and take a look at where we stand. Alright, so here's the ES futures, and you can see that we had a very kind of a small day with really not too much to show for it on a net basis. We are still positive. The trend is still up. The bias is still lifting price higher, although very slightly. I think the key takeaway here is that while we are above all three major moving averages, we're positive in all time frames. We are now into the overbought area of the Gann box and getting a little bit deeper into it. We're actually getting up towards that 1515 area, which is plus 1/8, and then if we get up to plus 2/8 at 1531 and a quarter, we're actually going to be pretty solidly overbought. Right now we're just very modestly overbought, which could of course either resolve itself either way by getting either more overbought or retracing and turning back to the downside. But for now, bias is still up. We're above all three major moving averages, and we're not short-term extremely extended, but just extended on the overall move so far from the first of the year here on this breakaway gap. Now on Friday, the big feature there was finally getting just a little bit of range and getting some distance away from this trading range that we've been in. The trouble is that with the rest of the markets as extended as it is and as tired as it is, at least for the short term until it recharges, this is having a little trouble pulling away here. We did have the gap up on Friday, a little bit of range expansion. Today was really just kind of a measuring inside day, working off that little bit of a move that we did have on Friday. 7/8 area, 2773.5 is definitely an area that will need to be resolved. The reason is, if you look back here, back in October, that was a key area and an inflection point on this bounce. There's certainly plenty of potential to get up at least to 8/8 at the 28.1250 area if the market has the wherewithal to do that. So definitely keep that on your chart as a potential trade to target if we resolve this little mini range to the upside tomorrow. This range is really going to be defined by Friday's trading boundaries, so make sure you have those marked off on your chart for tomorrow. And here's a look at the 10-day trend, which remains stubbornly neutral. Definitely not overbought or oversold. So if the market does want to continue higher and follow the path of least resistance for now, which has been with the existing trend, there's plenty of gas left in the tank before we get to the 0.85 overbought threshold. The put-call ratio has been fairly benign. A little bit of an upward bias has developed here as of today's session, but it's far from oversold or overbought. So no cause for concern here from the put-call ratio for tomorrow's play. All right, now as we've been doing, I think the one thing that bears watching is the cumulative advance decline for the New York Stock Exchange right now, which is still hitting new highs. Took a little bit of a hit this past session. Just want to make sure that this little downturn does not turn into a trend and start dragging price lower, which would definitely be a problem for the overall market and definitely be a signal for a potential top. Had this little bit of a downward action, but right now, one day does not make a trend, but we want to make sure we stay on top of this, and we'll be looking at this again tomorrow evening. Here's the multi-sector daily chart, which shows the decent health of the overall market, but the continued action in the XAU acting as a source of funds for the rest of the market. This really can only go on for so long, and the reason I'm pointing this out is because you can only squeeze so much juice from this lemon. If this exhausts itself and it doesn't really begin to start coming from the bond market overall, that's going to be a stopper ultimately for the broad market. Definitely keep an eye on the XAU. We could still get another leg down here and make this really oversold in the XAU that we'll look at later. But for now, everything else seems still true to trend. The stocks had a relatively decent day. The BTK did turn down today, and we'll look at that chart individually later. But for now, the old trend is still in place for now. Here's the NDX SPX cross. Starting to see a little bit better price action in the NDX versus the SPX. It did resolve that range. The NDX did, as we looked at in the earlier chart. So if we can start to develop some relative strength in the NDX and get back to a more positive trend, that would be a definite, real longer-term positive for the broad market. But as we always say, one day doesn't make a trend, so we need to see some more follow-through here. All right, folks, and here's a look at the OSX versus the oil futures. The OSX has really started to show some weakness here. We're threatening here with a lower low and a lower high now. We've got this little bit of a downward channel starting to develop. Oil futures have been hanging around positively, but if this divergence starts to gather momentum, expect lower prices in the oil futures, which will probably ultimately manifest itself into pressure in general in equities. And just remember that the commodities tend to lead equities overall, so this is an important relationship to keep forefront here for the next couple of sessions to see if this does continue. This does start to gather negative momentum to the downside. All right, now moving on to the individual sectors on the day. The BKX was really the top major sector. Did make a new high on the move and also a new high close, pushing a little further into the new upper fringe of the Gann box here that's been reset since the most recent frame shift. Nothing really to have a problem with this chart. The bar count's not in the way. We're on day 7 now as of today's close, so 8 or 9 could be a problem, but that's still a couple of trading sessions away above all 3 major averages, and we're not too extended above the 10 EMA. So for now, the trend is still intact and remains fairly positive here without any real hiccups. Here's the SOX index, the semiconductors. The SOX was fairly flat on the day. Kind of the same condition right now as the BKX, minus the health of the 200. The 200 is still fairly flat and starting to curl up. I think the key area to watch is going to be this 8 ace level at 437.50. If we can keep this going, if this does continue to lift, that's definitely going to be a positive for the Nasdaq overall, and could see that little mini breakout that we had on Friday out of the NDX overall kind of materialize into more of a more momentum move to the upside here. So positive momentum here in the stocks will bode very well for positive momentum in the NDX overall. BTK had a definite distribution day to the downside here. Not quite engulfing the previous day's range, but very, very close. This one is the one that was really rallying earlier and starting to get a little bit long in the tooth here. We've got a new count that's now 7 days up in the secret countdown, so keep an eye on that. The MACD now has a negative slope to it. It hasn't penetrated the 0 line. That would really imply some negative momentum, but this is starting to have some trouble here, and it's starting to look a little bit tired and troublesome. The BTK could wind up being a source of funds for some new purchases in the semiconductors, so that's definitely a rotation that could be on the horizon, so keep an eye on that. Here's the OSX that we kind of intimated at and talked about earlier. This weakness is not welcome. We did hit that 8 ace level, but never really got any distance above it, never really threatened a frame shift and some real positive momentum developing above and beyond what we had seen from the original 1 through 9 setup phase in the seeker here. Still relatively immature here in the countdown phase, and we do have a fresh MACD cross to the downside here. Here's the XAU, which has just been the whipping boy. Source of funds still in that 0 ace area. Hasn't really lost it yet. We did close a little bit below it, but really hasn't broken it yet. This is still kind of the area to avoid on the long side until we get some kind of a positive close above the 10 EMA, which hasn't happened yet. We are oversold, so bottom fishers can look here, but momentum, is really going to have trouble kicking in until we get that close above the 10 EMA. Here are the oil futures. Just to refresh everybody here, we're now 10 days up in the countdown for the seeker exhaustion, so we're not too far away from getting an exhaustion 13 reading. Still contained below this static trend line here from this 1 through 9 to the downside. So there's really some pretty good resistance looming up above the current high water mark on this chart if we try and push up towards that 100 level. Gold on the day was fairly weak, not quite breaking any new lows, but broke this little static trend line from this tiny little bounce that we did have. Price is still below all the major moving averages, so this remains negative until we get a price flip back to the upside here and get some positive momentum to the upside. You can count on that happening though if the equity market does start to turn down, but at this point we do not have that condition. Well, that's going to be it for this evening. We look forward to seeing you tomorrow night. As always, please feel free to leave a comment below. This has been Rich Derrick from Tradesight, and thanks for listening.